Well, welcome to the fun and mentals of real estate. I'm your host today, Angela Dillmon with Keller Realty, Chesterfield, and this is my wealth building partner,
Glen Calvin at Guild Mortgage.
All right, we are here to help you build wealth,
Live your dream lifestyle,
and leave legacies that matter. And
Yes.
today, it's wealth building.
Yes,
it's
it's
definitely
wealth
building because
building 101.
we got a question. I got a question of the day for you, Glenn, because you're the expert lender.
Yeah, right.
All right, here's my question. What is the difference between recasting and refinancing?
So we're doing a lot of the recasting right now, and that's a case where somebody has bought a house, retained the one that they were living in, moved in, staged it, got it all ready, put it up for sale, sold it.
And
so
now I got a bunch of cash.
Right. So I put the minimum down when I bought my house. I put 5% down.
Yeah.
Now I've got another 15, 20%, whatever I made from my house.
Yeah, say it's 50 or 100 grand.
Right. So when I bought the new one, I put 5% down, so I've got mortgage insurance. Okay, and the principal and interest is a little bit higher than what I want. So what
Ooh, it's a high payment if I
Guild
only put
Mortgage
5.
allows, it's a recast, and what you're going to do is you're going to take that money that you've got, you're going to send it into Guild, then you're going to request that they adjust the payment to reflect the new principal balance. And
you mean I got to lower my payment?
Yes, and
wait, I got to pay for this?
You don't have to pay anything. We do it for free.
Oh my gosh!
We'll only do it once a year, and it has to be a minimum of $10,000. But we'll also, as long as you're paying it down below 80%, we'll also remove that mortgage insurance.
Woo! Now wait a minute. So I just closed last week.
Right.
And I put this 5% down. And by the way, it's not just if I sell my home and have a bunch of equity.
Right.
It's if I have cash from anything,
You
right?
inherited some money.
Right.
Yes. Yeah,
anything.
right.
All right. So, and I have this big lump I want to put down. You're telling me I could put down, they'll lower my payment for free.
Right.
Does it change my interest rate?
It does not change the interest rate. The interest rate stays the same.
And it doesn't cost me anything because
cost you
it's
anything.
not the same as refinancing, is it?
Nope. We're going to send
All
out.
right. Wait a
It
minute.
is a process, though. So we had a couple customers that thought it's like I Dream of Jeannie. You just blink your eyes and it happens. It doesn't. You have to request that they do that. They're going to analyze it. They're going to approve the request. Then they're going to send out a modified note. You're going to sign the modified note. It's got to be sent in. It
And it
takes
gets
a couple
recorded.
Weeks. Right.
Notarized, I assume.
The note doesn't get recorded.
Okay.
But they are going to have a modified note on record that you sign.
Okay.
Now,
All right.
if you would pay this money down and you didn't recast, then you've just accelerated that principal. So you're just going to pay it off. But in most cases, it makes more sense, especially if the rates are the same or maybe higher, to recast that loan.
So I just closed, though. I sell my house. 2 months later, I'm closing and I have this big lump. Can I do it that fast?
You certainly can. Your lender's not going to want you to, specifically your loan officer's not going to want you to. We would prefer that you wait 4.5 to 6 months because we lose part of all of our commission on that loan. So it's usually a courtesy, and we're going to talk about this beforehand. But technically, you could close the deal on Friday and you could pay the entire loan off on Monday. There's no prepayment penalty on any of our loans.
No.
But it is nice to the loan officer who did a lot of hard work, who helped set all this up. You know, why wouldn't you give him the due to make his money and look at your big fat bank account for a couple months?
I see.
So
or invest it.
now let's say the same situation, but the rates are considerably lower. Well, we might want to think about paying that loan down and refinancing.
So refinancing is a whole other ballgame.
It is, and I think a refinancing is like I'm buying the house from myself. I'm actually paying that old loan off. I'm putting a new loan in place. And I'm
I got a lot of questions about that. Now, do I have to go back to a 30-year loan?
Can.
Let's say I have a 30-year or a 20-year. Do I have to go snap back to that?
No, you don't. You can choose the term. So you can
choose
actually
the
do, with Guild is really cool because you can keep the term the same. So let's say you've been in that loan for 30 months, okay? And you refinance, you can actually set up the new loan to stay at 330, so you're on the exact same schedule.
I see.
Now, a lot of people, depends on your circumstances, you may want to go back to that 30-year because that's going to drop that payment even more. It depends on your circumstances. Just know you have a lot of different options.
All right. Now,
so recasting is not allowed on the government loans. It's just going to be on the conventional
only
loans.
Conventional.
On the FHA, VA, USDA, MHDC, those loans are not going to allow the recasting.
Oh, not going to allow the recasting. Okay, so how do I refinance? What types of refinance? Are there different types, or is it just one size fits all?
No. The conventional has their own programs. We can use that on a conventional loan. We can use the existing appraisal for up to a year.
Ooh, so if rates were to drop, I could do that.
Right.
All right.
If we got an FHA loan, FHA loan has a great program. It's an FHA Streamline. They don't require a credit report. They just require that we prove that you've made 12 payments on time, no 30-day lates. We have to verify a utility bill that you still live in the house.
Okay.
And we have to verify your Social Security number.
No appraisal?
No appraisal.
What about income?
We don't even verify the income.
Ooh, wow, that is a good
Now,
deal.
you
That's
can-
only FHA though.
FHA. VA has its own, but on the FHA one, they do not allow you to increase that loan amount. So
Okay.
you're not gonna be able to skip a payment. You're gonna be able to roll in a lot of the closing costs.
But I can just reduce my interest rate. Does this cost me anything?
It does. We have to update the title. There are some fees. There's some lender fees involved. So
Is it pretty minor though
It's very
compared to not streamlining?
the advantage of the Streamline is we don't need a credit report. We don't need to verify your income.
And
It
no
could be if
appraisal
you
cost.
and no appraisal
Is
cost.
it same underwriting fee for the lender?
Yes, right.
Okay. And still got to
and
update the title.
Right.
Okay. Still
But it's
gotta
very easy. But if there's equity, you may want to go ahead and get an appraisal and see. And VA and not VA, FHA will allow you to go up to 80% on a cash out refinance.
Okay, well that's different scenario
Right.
now.
Now VA, real quick, VA has their one. It's called the Interest Rate Reduction Refinance Loan, the IRRL we call it. And that's very similar to the FHA Streamline. Not a lot of paperwork.
Okay.
Very easy to do. Now VA does limit how many times you can do that and how soon you can do that because it was abused for a while. It's a
Okay.
little bit longer. Check with your lender.
Okay, now if you talked about cash out refi, what does that mean?
So that means you're going to get a new appraisal on the property. Hopefully you can following your home bot, knowing where your equity is, and we can go up to 80% of that value, pay off the loan, and whatever's left there, you can get a cash at closing, and you can use that for whatever. What do you say?
So
Debt
if I
consolidation.
have a house that's worth $400,000, I can borrow up to $320,000 on it.
Right.
Is what you're saying.
And cash out.
So if I only owe $250, and you'll let me go to $320, right? Then I've got this $70,000 that I could do something else with.
Right. We've seen
Now-
people use it for debt consolidation. We've seen it for home improvement, purchase another property.
So are you saying I can use it for anything I want?
The lender's going to want an explanation of what it's for. I've never heard a loan get denied because of that explanation, but yes, you can use it for
I
whatever
can buy a
you want.
boat,
Of course, yeah.
a car,
Car, a wedding. I've seen all kinds of crazy stuff.
vacations.
Vacation.
Don't
yeah.
recommend it. So in the wealth
No.
building area
Right.
here, we don't recommend cash out refinances for cars and boats. And one of the thing is that those car loans end up being 30-year loans. You know the interest that you pay on them
It's
as opposed to
crazy.
just getting a 5 or 7-year car loan if you have to get a car loan.
But we worked at the same way. I've had people tell me, this is only saving me $70 a month. Well, over 20 years, I mean,
Right.
that's a
It can
very
be a
big
lot of
number.
money.
Yeah,
Right.
and it adds up and it compounds. And then we've had other people that say, I'm going to refinance and I'm going to keep my payment the same, but I'm going to lower my term.
So how much does it actually cost me to do a conventional refinance?
It depends on a lot of different factors.
So let's just say I have a $400,000 house, and I did not get an appraisal waiver. I understand that sometimes you put stuff in the system and they're not even doing appraisals anymore
Right.
because maybe my loan balance is only $200,000,
The-
and they're like, you got 50% equity here.
The
What
artificial
do I need an appraisal
intelligence is
for?
the artificial intelligence is really taking over in that space, and we're seeing a lot of innovation. The whole thing is to make it easier, and of course, the bigger the loan, the less it has to go down in the interest rates for you to save. If you only had a $40,000 loan, I've talked to a lot of people out
Yeah.
of refinancing because even if they're at 7.5%, 8%, and they could get it down to 6%. It's not worth it because they only owe $40,000.
Well, let me ask you this now. I have these escrows for taxes and insurance that are part of my payment.
Right.
So when I make my payment for $2,000 a month, I've got $300 going to taxes, and I've got $150 say going to insurance. I have $450 of that. $2,000 is going in this escrow account to pay those taxes and insurance, right?
Yeah.
So now if I refinance, let's say I have a loan at one bank, and I call Guild and I say refinance me. How do I Is that part of my closing cost?
It's really not a cost because it's just money. You know, we talk about that escrow account. I like to call that a forced savings account.
It's
All
what
the
it
money
is,
belongs
yeah.
to you. So
Right.
if we do pay off that other loan, whatever money is in that escrow account, they're going to mail it back to you. Now, if it's a guild-to-guild refinance, it's very simple. We're just going to transfer it.
Ooh,
But it's also
guild to guild. I get to
those are-
transfer.
yeah,
That
those
is
are easy.
sweet. But if
But-
not, I gotta front that money.
You do, but you're going to get all of
somehow.
it back.
Can I
right.
borrow that and put
You
it into
can.
my loan?
Of course, you can.
Okay, so
And you can treat that kind of like a cash out. I call it it's a non-cash out, cash out because maybe you're going to get a couple thousand back on your escrow, and you're not going to have a payment the next month, and skipping a payment, getting a couple grand. I've had people that I've helped that changed their life. They were just couldn't get quite caught up. They did that,
right.
and it really
skip
made
the
it.
payment. So when you're talking about what it costs to refinance, it's you got lender fees of appraisal and underwriting. What other fees do I have?
We're going to have to update the title, which isn't
Oh.
expenses as on the purchase title. It's going to be a lot.
So it could be $600-700 to
Right.
update a title.
As opposed to on a purchase, 15, 16, 17.
Well, because you're actually getting the policy then,
Right.
right? And appraisal, if I need one, is 425.
Yep.
Ish, okay.
And then we've got the recording
fees.
flood letter, little miscellaneous fees.
Okay, and then set up the escrows if I don't
So,
get this transfer.
But don't look at this setting up the escrows as a fee. We're really just moving that money around. And refinancing is a great time too to correct those escrows. So if you're behind and there's a shortage, we're going to make sure that we're basing them all on the new numbers. So maybe you have to come up with an extra $3,000 or $4,000 for 4 or 5 weeks until you get it back from the other lender.
I see. So I can either borrow that into my loan amount, raise my
just-
loan amount
or
to
just-
cover it,
right.
and then go ahead and get that extra 3-4 grand. I wouldn't mind that, skipping a payment and getting 3-4 grand out of my escrow.
But remember, go back to Dave Ramsey. You're
You're
borrowing more money.
You're
so-
borrowing more money.
So if you do have the money, and you don't need to, it can be done that way.
Okay, all right. So we've got streamlines, cash out refinances for all kinds of reasons. I don't. Have they ever denied anybody based on
I've
what you
never
tell
heard
them?
it. I
Like,
don't know
hey,
what-
I want to buy a boat.
No,
What
you
would
can
get
buy
me
a boat.
denied?
I need the money to buy drugs. I don't know.
Okay, something
I don't
like
know what
that.
a bad example would be.
All right,
but
that's
yeah.
a bad example. I'm gonna say it is. All right, super good. So it doesn't change my insurance or what my escrow is.
It
just I have
can,
to,
but only for the better. We're just going to make it right. At the time of closing,
Right.
we're going to update those numbers and make sure that we've got it all in there.
Okay, super. All right, so
So I would say
when
that,
is a good time? How do I know when the interest rates? So let's just say I've got this 6.5% interest rate. When do I know it's a good time for me and makes financial sense to refinance?
yeah. So there's
So
not a
what,
one
6
size.
1/4,
Yeah.
a 6?
I've had people go from go from 6.5 higher to 6 3/4 because they pulled out money to do debt consolidation.
Right.
So it's not always that the rate went down. It really depends on what your situation is. It has a lot to do with the size of the loan
Right.
and the cost. And
But-
a lot of good lenders will give you options. So you're always going to get an option where this is what it's not going to cost you anything. So all that means is the lender is moving that interest rate higher. He's getting a bigger premium, and he's taking that extra money, and he's paying all those fees we talked about.
This is going to make my head hurt, and it's going to be more mental than fun. I like
Lot of
paying
mental.
cash out to go buy a boat or a car or remodel my house. I prefer you remodel your house with it than buy something with it. But what I'm saying is next week, we're going to get mental on refinancing.
Perfect.
Figure out when it's the right time for you to refinance. So we do have a great app called HomeBot that helps you watch the interest rates, and it'll actually tell you, hey, if you refinance at this number, here's what your new payment might be. So
HomeBot's awesome,
we're going
yeah.
to talk a little bit more about that too, to help you watch these things to help build your wealth. So
Right.
join us next week when we do a deep dive into refinancing, which is always on everyone's mind after they close a loan.
Awesome. All right. Thanks, Angie.
Thanks, Glenn. I hope you had a little bit of fun today, and next week we'll get mental on you, okay? All right.
Perfect.
Thanks for joining us. See you next week.